Shadow of Truth, and today is Thursday, March the 16th, 2017. And your hosts are Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. How you doing today, Dave?
Not too bad. Just surveying the collateral damage to the markets after yesterday's Fed circus. So I have a feeling we'll be touching on that subject briefly today.
The circus was in town in more ways than one yesterday, so oh, let's get in and see what happens.
So what's on your mind today, man?
Well, we had Trump in town yesterday, and he made quite the uproar here in Nashville, and the protesters. There was a lot more than what I originally thought. There's probably 500, 600 protesters. Haven't been able to figure out if they were, shipped in, if they were Soros group. I'm sure he had a hand in it. As far as the size and the number of people, I'm sure there were some that were shipped in, just not sure how many. And it was actually pretty cool. I mean, we had tickets and we were going to go, and we actually went down to go to the rally. And when we got down there, the line to get in was about a mile long. And I'm not exaggerating. It was at least a mile long. And there were 2, 3, 4 people wide for a mile. I mean, it was unbelievable, the volume. And that's what I thought was really cool, was the support for the president. Here at home. I mean, it was just a proud moment for me personally. Love him, hate him, I don't care. I mean, he is the president. And after we got done, we went down. We were going to go, and we said, no, we're not. We'll never get in. And so we just came back home. And when we got back home, it was like, okay, Obama was just here. It was less than a year ago, and there was nothing like this for him. Nothing, even close. I mean, not even close to the outpouring of people for him to be here in Nashville. Nothing even remotely close to it. Probably fewer than 5,000 people total at the event when he was in town. I would say far, far fewer than 5,000. And there's probably 15 to 20,000 that were trying to get into a venue that holds 9,000 for Trump yesterday. But what do you think? What do you think about the FOMC and reaction from Golden?
Just a sec here. The thing with the Trump, though, that just shows you the power of hope and denial, because you got this Trump hopium out there. People are clinging to it, I mean, yes. That's what drives people to get out of bed every day, is hope. Obama probably would have had the same thing in 2008. It just shows you how blind people are to facts and reality. I mean, Trump hasn't done anything. In fact, if anything, he's probably lost ground versus what he was promising to do in his first 90 days. All of his executive orders are getting repudiated. The critical one for him, the travel ban thing, I mean, that's been shot down by judges everywhere now. He's put up completely unrealistic budget proposals in front of Congress that'll never get passed. Maybe that'll give him an excuse. Hey, Congress wouldn't pass my programs. My programs would have worked. Well, no, they wouldn't have. It was ramp up spending, ramp up borrowing. What amazes me is, and some good friends of mine and I have been studying this for a long time. We think there's been a muzzle put on the media about the debt ceiling, which now legally the federal debt outstanding can't go over 20 trillion. I mean, the fact that we're even talking about 20 trillion is just mind blowing.
Yes.
If you take 0 BC and spend $1 million every day since 0 BC, you still wouldn't have $1 trillion. The U.S. has borrowed 20 times $1 trillion. So, and I don't know how the debt ceiling limit, the legal limit now, is going to be resolved. I suggested maybe Trump will try and sign an executive order, demanding that the Treasury start issuing more debt. But either way, it's just absurd that we're talking about this much debt. I mean, before Nixon closed the gold window in 1971, there was almost no government debt. So, my point here being is that what you saw yesterday was the power of hope. And, people, who cares if Trump's our president? In a democracy, we're allowed to criticize him and take shots at him. You shouldn't fall in line behind someone just because he's your president. That's how we get into the trouble that we're in now. People they look at the headlines, they look up at their leader, and they just, they get a blank look on their face, their jaw opens up, and they're like, yeah, okay, we'll do it, and that's when you're going downhill as a nation.
I don't disagree with that.
So, 2 years from now, if Trump's still in office, I doubt you're going to see 25,000 people fighting to get into that stadium.
Well, maybe.
Just like Obama wouldn't, it's just like Obama, the support for him waned because, the average person on the street looks around, hey, the same amount of money that I'm spending now and, doesn't buy me nearly as much as it did in 2008. What happened? And the only thing that's kept this system afloat is the credit issuance. I mean, you had when in 2008, when the system basically collapsed, you had about 50 trillion in total debt, and that's everything: public, corporate, individual. Now it's over 65 trillion. I mean, that's just a staggering number.
That is staggering.
And to only get in that time frame, on a manipulated basis, a couple trillion increase in GDP, and that just tells you, how much debt it takes to generate just even a little bit of nominal economic growth. Forget about real growth. Real growth's been negative.
Yeah, and most of that growth has been in healthcare, just in the past couple of years.
Right.
Because of Obamacare, because of being forced premiums and forced participation. And that's
that plus it's been inflation.
Massive
if you strip out a real inflation number out of that GDP number, you're basically GDP's contracted. A real basis means take out the price increases, and what's the what's the change in the number of widgets that are being produced, the volume of widgets. There's price and volume, and that's how you get your nominal number. So you reduce the price by the inflation rate, and you multiply it by the volume, and your GDP is lower.
I would bet a lot lower.
Well, it is. We did this exercise, Paul Craig Robertson, myself, and John Williams. This is, probably John Williams' alternative shadow statistics inflation numbers. And he does it in two ways. He looks at it, takes the exact same way the government was calculating the CPI index in 1990, and then he also calculates an inflation number using the way the government changed the CPI index or calculated the CPI index in 1980.
Right.
What happened is in 1971, Arthur Burns, after they closed the gold window, it might have been a little bit later than 1971, they knew that they were going to start having a price inflation problem because they were going to be inflating the money supply. And so, starting with the Arthur Burns Fed, they started rejiggering the way that they measured, the way they calculated the CPI index. And as Dr. Roberts says brilliantly, the CPI index doesn't show inflation because it's not intended to measure price inflation. It's intended to put out the number that the government wants people to believe. And the reason why they rejigger it is they've got all these federal programs and entitlement programs that are geared to, the cost index based on the CPI. And if they were to use the real inflation number and increase the entitlement payouts based on the real CPI number, our federal debt would probably be $30 trillion now,
or more, probably a lot more.
But you would ask me about the Fed, and there's no surprise at the Fed. All you need the Fed's lost control of this thing, and that was evident from the reaction of the markets. I mean, gold popped up, I don't know, probably close to $30 from bottom to top yesterday.
Yep.
The stock market is what it is. The dollar tanked. I mean, if the markets were free and unfettered and not so, they've just been destroyed, and they don't do anything that a free market would do, and it's the evidence of how much intervention there's been and how much manipulation. But you had a quarter point hike in rates, 25 basis points, and the dollar drops, stock market shoots up, and gold shoots up. Now gold's a different beast because statistically, over time, when the Fed goes into rate hike cycles, gold in general rises quite a bit, actually, because the market says, oh, well, the Fed's behind the inflation curve, which is obvious now. But stocks aren't supposed to go up. Stocks, when raise interest rates, increase the cost of capital. You increase the rate used to calculate, the net present value of future cash flows, and those go down. So stocks should be selling off, and the dollar should be moving higher. It got crushed yesterday. So it just tells you how messed up the markets are.
It's completely backwards.
Completely backwards. And then you have the Atlanta Fed, who's taken their GDP forecast for 2017. In the middle of January, they were forecasting a 3.5% GDP growth rate for 2017. Yesterday, they've ratcheted it down almost every week. Yesterday, they took it down to 0.9%. So
for the year?
For the year.
Wow.
That's the annualized rate. And that's a nominal rate. If you take just the CPI index that the government uses, you're negative. It takes that nominal rate and moves it negative. If you just calculate the CPI index the way it was calculated in 1990, and this is from John Williams' Shadow Statistics, and the rate of inflation this year is in the trailing 12 months is 6.3%. Not this 2% number we're being fed by the government. So if you applied that inflation rate to the nominal GDP, you'd be significantly negative.
About 5%.
Again, that's on a real basis, the amount of wealth the economy, either by which it contracts or increases. And what it tells you is that the number of widgets put out by the volume of widgets produced by the country and consumed by the country has declined. Or will decline quite a bit, according to if the Atlanta Fed turns out to be right, which they won't be right because the government will rig the GDP number so that they say, "There, Atlanta Fed, you were wrong," and then everyone will they'll report a 1% GDP number. Oh, it beat expectations.
Yeah.
So. And the same thing applies to retail sales, which the government Census Bureau is telling us increased 0.1% in February versus January. Well, first of all, that number is totally absurd because most of it's based on estimates. And if you looked at the Bank of America retail sales report that they put out from their internal numbers, and this is the shopping mall report, retail sales fell the most that they've fallen in 15 years in February. And that's based on their debit and credit card numbers. So their numbers are probably pretty good. And while they may not be, they're not going to reflect the entire retail industry. Online sales is only about 9% of total retail sales. And there's going to be a high degree of correlation between brick and mortar retail sales and online retail sales. So if they're saying that shopping mall sales dropped, I think it was like 15% in February.
A lot.
If they're saying that retail sales fell that much at the shopping malls in February, there's no question that online retail sales were either flat to down. So that means the real retail sales number, now I'm talking about the real nominal retail sales number, was likely negative in February, but the government will never report that. And then if you strip out inflation, because those are nominal numbers, if you strip out just the CPI inflation rate, your retail sales declined in February based on the government's nominal number. If you use John Williams' inflation rate as it was calculated in 1990, retail sales plunged in February. And that's consistent with everything that I'm seeing and everything else I look at. Reports from private companies, etc. Well, publicly traded private companies, reports from the private sector.
It's a mess. I mean, that's the only way you can say it. Everything is coming unglued, and it seems to be accelerating at this point. I mean, because none of this is new to us, Dave. None of it.
Well, it's not new to anyone. The problem is, most people, the government reports are intended for the headlines, and then
right.
those headlines get flashed everywhere.
And they trigger the algorithms.
News, yeah, local news, newspapers, everywhere, and then that in people's minds, that's the number. But very very few people ever pull up the actual reports and look below the headlines, and they don't want you to do that.
No,
because if you look below the headlines, you start scratching your head like, wait a minute, that number that they flashed in the headlines is completely fraudulent.
Yes. And it's unfortunate that we can't get the truth except, in places like Shadow of Truth and your website, my website. I mean, it's a crying shame because everything is falling apart. It's only a matter of time before the rainbows and unicorns turn into grenade launchers and dark skies. I mean, I'm not trying to, be all doom and gloom, but facts are facts. I mean, and until we start looking at them realistically, then we're no better off than all the other people that are walking around with blinders on. And I don't want to be those people.
Rory, it's politically and socially incorrect to be doom and gloom.
Well, then on a happy note, you made a great call last Thursday.
I did?
Yeah, on our last Thursday when we were talking, gold and silver had been drifting lower and lower and lower, and had that big smash down last week. And on our Thursday show, you said that it had kind of stabilized, down around that bottom number, whatever it was, right around 17. And you said that it was going to go a little bit lower on Friday. And it did. Stayed there until yesterday. So I hope everybody was able to take advantage of the silver at spot that they can get through the dailycoin.org over at SD Bullion. I mean, because they could have saved, somewhere around $7 or $8 on a 10-ounce bar bar or more. Because I was watching that, and unfortunately, I'd already picked up one of those bars, and I missed out on that absolute bottom, and it just about killed me because I left several dollars on the table. But it is what it is.
But you're talking about picking up nickels in front of a steamroller. I mean, silver's not going to be below $20 forever.
No,
probably not a lot longer. So, if you miss it, if you don't buy it now because you missed the bottom, well, then you're going to be chasing it.
Well, I know now's a good time to get it because it seems like things are, like I said a minute ago, it seems like the the pace of the deterioration is picking up, and it's becoming almost too much for these guys to hide. I mean, everything's coming unglued. I mean, the whole thing. Can't have $20 trillion worth of debt and expect things to run smoothly. You can't have negative growth and expect things to run smoothly, no matter how big the lie is, no matter how much they lie about it. Doesn't at some point it won't matter, because the rips in the fabric will be seen. The emperor's nudity will be known. I mean, it's just that simple. I mean, what else you got, Dave?
That's it for me.
Well, I guess we've depressed him enough for the weekend.
Man, everyone should be happy today because gold and silver popped up so much yesterday.
Yeah, they did shoot up pretty good. It was nice to see. Needs to do that about 10 more times, and then we'll be getting into the realm of reality.
Well, eventually it will.
Well, all right, dude. Well, y'all have a good weekend, and I guess we'll pick it up on Monday and see where we stand.
That sounds good to me.
All right, buddy.